How to Day Trade for a Living by Andrew Aziz. Introduction. Imagine this for a moment. You're young, ambitious, and you've just made your very first trade in the stock market. You buy 1,000 shares of a little-known company at $4 a share. You're nervous, your heart is pounding, but you have a good feeling about it. And then, it happens. In a matter of minutes, the stock price explodes. It climbs to $5, then $7, then $10. You can barely believe your eyes. You hit the sell button, and just like that, you've made over $6,000. $6,000 in the time it takes to make a cup of coffee. You lean back in your chair, a smile spreading across your face. You think to yourself, this is it. This is the secret. It's easy. This is exactly what happened to a young Andrew Aziz. On his first real trade, he stumbled into a massive win. He felt like he had discovered a cheat code for life, a license to print money. And in that moment of pure beginner's luck, he learned the single most dangerous lesson a new trader can learn: the illusion of ease. Because what happened next is the real story. Over the next few weeks, armed with his newfound confidence, Andrew proceeded to lose that entire $6,000, and then some, making one mistake after another. It was a painful, humbling experience. But it was also the most important experience of his career. Because it taught him the truth that forms the very heart of the book we're exploring today: How to Day Trade for a Living. The truth is that day trading is not a lottery ticket. It's not a get-rich-quick scheme. And it is most certainly not easy. It's a profession. A serious, demanding, intellectual profession that requires the same level of dedication as becoming a doctor, a lawyer, or an engineer. And just like those professions, if you're willing to put in the work, master the craft, and develop unshakable discipline, it offers a reward that few other careers can match: absolute freedom. Today, we're going to pull back the curtain on this mysterious world. We're going to walk the path that Andrew Aziz lays out for us, a path that has helped countless people turn a dangerous hobby into a profitable business. By the end of our time together, you'll understand the mindset, the tools, and the strategies that separate the handful of traders who succeed from the vast majority who fail. You'll learn that this isn't about gambling. It's about building a business, one smart, calculated move at a time. This is the beginner's guide to a life of financial independence, and the journey starts right now. Book summary. So, let's begin with the question that probably brought you here in the first place. Why would anyone want to be a day trader? If it's as hard as they say, what's the appeal? The author, Andrew Aziz, is very clear about this. The appeal isn't just about money, it's about the lifestyle. Imagine a life where you are your own boss. You work from home for just a few hours each morning. You decide when you want to take a day off, without asking anyone for permission. You have the rest of the day to spend with your family, to pursue your hobbies, to travel, to live. This is the promise of day trading. It's a career that, if mastered, can give you a level of freedom that most people only dream of. But here's the paradox. The very thing that makes day trading so attractive, this incredible freedom and the potential for high income, is also what makes it so dangerous. It looks deceptively easy from the outside. People hear stories of quick profits and think, I can do that. They jump in, unprepared, and become part of a sobering statistic that Andrew shares right at the beginning of the book. Records from financial brokers have shown that after 6 months of trading, only 16% of day traders are actually making money. That means 84%, the vast majority, are losing. The entire purpose of this book is to give you the map to get into that 16%. The first step on that map is a crucial mental shift. You must stop thinking of day trading as a game, a hobby, or a way to get rich quick. Andrew's first and most important rule is this: day trading is not a get-rich-quick scheme. His second rule follows directly from it: day trading is a serious business, and you must treat it as such. Think of it this way. If you wanted to open a restaurant, you wouldn't just rent a space, buy some food, and hope for the best. You'd need a business plan. You'd need to learn how to cook, how to manage staff, how to handle finances. You'd invest in the right equipment and education. Day trading is no different. It's a business you can start from your bedroom, with a relatively small amount of capital compared to a restaurant, but it demands the same professional approach. You need a business plan, the right tools, a solid education, and most importantly, the discipline to follow your plan every single day. If you can make that mental shift, you've already taken the most important step on this journey. Now, once you've accepted that this is a serious business, you need to understand the battlefield. Who are you competing against? When you place a trade, you're not just clicking a button in a vacuum. You are entering an arena filled with some of the sharpest, most well-equipped minds in the world. On one side, you have the institutional traders. These are the giants, the Wall Street investment banks, the massive hedge funds. They trade with billions of dollars and use sophisticated computer programs, often called black boxes, that execute thousands of trades per second. This is known as high-frequency trading, or HFT. On the other side, there's you. The individual, the retail trader, sitting at home with a laptop. It seems like an impossible fight, doesn't it? How can you possibly compete with that? This is where Andrew introduces a brilliant and empowering analogy: the guerrilla warrior. A guerrilla army doesn't fight a traditional army on its own terms. They don't meet them on an open field for a head-on battle. That would be suicide. Instead, they use their unique advantages. They are small, quick, and patient. They hide, they wait for the perfect moment, and they use hit-and-run tactics. They strike quickly and disappear back into the jungle. As a retail trader, this is your model. You have advantages the big institutions don't. First, you don't have to trade. The banks and funds have to be in the market constantly, trading huge volumes. You, on the other hand, can wait patiently for the perfect setup, the one that gives you the highest probability of success. Second, you are nimble. An institution trying to sell 1 million shares of a stock can't do it with a single click. It takes time, and their own actions move the market against them. You, trading with 100 or 1,000 shares, can get in and out of a trade in a fraction of a second. This speed is your superpower. So, your strategy isn't to outsmart the computers or defeat the banks. It's to find the small pockets of the market where they can't touch you. It's about finding the financial jungle where you, the guerrilla trader, can operate effectively. And that brings us to one of the most critical concepts in the entire book: stocks in play. The vast majority of stocks, on any given day, are just moving with the overall market. If the S&P 500 is up, they're probably up. If it's down, they're probably down. These stocks are dominated by the institutions and their algorithms. Trading them is like fighting the big army on the open field. But every single day, there is a small handful of stocks that are moving for their own reasons. They have a unique story, a fundamental catalyst. Maybe the company announced surprisingly good earnings. Maybe they got FDA approval for a new drug. Or maybe there was bad news, and the stock is falling sharply. These are the stocks in play. These are the stocks that attract a flood of attention from other retail traders just like you. And when thousands of retail traders all focus on the same stock, our combined volume can actually overpower the algorithms. We create our own momentum. This is the playground where we want to be. It's where our simple, predictable strategies work best, because we're all watching for the same patterns. It's a self-fulfilling prophecy. The fourth rule Andrew gives us is to always ask, is this stock moving because the whole market is moving, or is it moving because it has its own unique story? Your job, every morning before the market opens, is to find that handful of stocks with their own unique story. This is the essence of trade the best, leave the rest. You ignore the thousands of other stocks and focus only on the few that offer the best opportunities for that day. So, you've adopted the mindset of a business owner. You understand your role as a guerrilla warrior. And you know you need to focus only on stocks in play. Now we need to talk about the rules of engagement. The principles that will keep you alive long enough to become profitable. The single most important job you have as a day trader, the one thing that matters more than anything else, is not picking winning stocks. It's not predicting the future. Your broker is the one buying and selling stocks for you. Your one and only job is to manage risk. Let me say that again, because it's the core of everything. Your only job is to manage risk. Good traders watch their money as carefully as a professional scuba diver watches their air supply. They know that one careless mistake can be fatal. The first rule of risk management is one we'll come back to again and again. You should never risk more than 2% of your trading account on any single trade. If you have a $10,000 account, the absolute most you can lose on one trade is $200. If you have a $30,000 account, it's $600. This is your survival rule. It ensures that even if you have a string of losses, you can still stay in the game. It allows you to live to trade another day. The second rule of risk management is about the trades you choose to take. You are looking for what Andrew calls low-risk entries with a high potential reward. He insists on a minimum profit-to-loss ratio of 2 to 1. What does that mean? It means that for every dollar you are willing to risk, you must have the potential to make at least $2. If you enter a trade where you might lose $100 if you're wrong, you should only take it if you can realistically make $200 or more if you're right. This is a mathematical edge. Think about it. If you stick to this rule, you can be wrong more often than you are right and still make money. If you win on just 40% of your trades but your winners are twice as big as your losers, you will be a profitable trader over the long run. This reframes the entire goal of trading. It's not about being right all the time. It's about making sure your wins are significantly bigger than your losses. And how do you control those losses? By embracing something most people hate to do, admitting you're wrong, and doing it quickly. Emotional trading is the #1 reason traders fail. They get into a trade, it goes against them, and their ego gets in the way. They think, it has to come back. They hold on, hoping to break even, and a small, manageable loss turns into a catastrophic one. A professional trader, on the other hand, is a really good loser. They know where their line in the sand is before they even enter the trade. This is called a stop loss. If the price hits that level, there's no hesitation. They exit the trade, take the small loss gracefully, and move on to the next opportunity. Their job is not to be right, their job is to make money. And sometimes, the smartest way to make money is to stop losing it. There's another crucial rule we must discuss, one that separates day trading from every other style of trading. Andrew's third rule is, day traders do not hold positions overnight. This might sound extreme, but it's a core principle of this specific business. The stocks that are great for day trading, the volatile stocks in play, are often too risky to hold overnight. News can come out after the market closes, and a stock can open the next morning 20, 30, or even 50% lower. By closing all of your positions before the market closes at 4 p.m., you eliminate that overnight risk completely. You sleep soundly, knowing that your capital is safe, and you start fresh the next morning. If you're in a losing trade at the end of the day, you must sell it and take the loss. Turning a day trade into a hopeful swing trade is one of the most common and disastrous mistakes a beginner can make. So, we have the mindset and the rules. Now, let's talk about the toolkit, the practical things you need to run your trading business. First, you need a good broker and a fast trading platform. Speed is everything. Andrew uses a platform called DAS Trader, which is known for its fast execution and support for something called hotkeys. Hotkeys are keyboard shortcuts that you program to send orders instantly. Instead of fumbling with a mouse to click buy or sell, you can execute a trade with a single key combination. When a stock is moving quickly, those few seconds can be the difference between a profit and a loss. Mastering your hotkeys in a simulator is a non-negotiable step to becoming a professional. Next, you need a way to find those stocks in play. This is where a stock scanner comes in. A scanner is a piece of software that filters the entire market in real time based on criteria you set. Every morning, Andrew programs his scanner to find stocks that meet specific conditions. They are gapping up or down at least 2% before the market opens. They have unusual pre-market trading volume. They have a history of moving enough each day to be worth trading. And, most importantly, there is a fundamental catalyst, real news, driving the move. This process takes the universe of thousands of stocks and narrows it down to just a handful of high-potential candidates for the day. This is how you find the battlefield where you have the advantage. The final, and perhaps most important tool in your toolkit is your ability to read the story of the market. And the language of that story is written in candlesticks. Andrew dedicates a whole chapter to this, but he keeps it beautifully simple. He explains that you don't need to memorize hundreds of complicated patterns with fancy names. You just need to understand the basic psychology that a single candlestick represents. Imagine each candlestick as a visual record of a battle between buyers, the bulls, and sellers, the bears, over a specific period of time, like 1 minute or 5 minutes. A long, hollow, or green candlestick tells you the buyers are in firm control. They push the price up from the open to the close. It's a sign of strength. A long, filled, or red candlestick tells you the sellers are winning. They push the price down. It's a sign of weakness. And then there are the most interesting candles of all, indecision candlesticks, like dojis or hammers. These have small bodies and long wicks, or tails. A candle with a long lower wick, a hammer, tells you that during that period, the sellers tried to push the price way down, but the buyers fought back and pushed it all the way back up. The sellers lost the battle. This can be a powerful signal that a downtrend is running out of steam. By learning to read these simple stories, you can get a real-time feel for the balance of power in the market. You're not just looking at squiggly lines, you're becoming a social psychologist, observing the collective behavior of thousands of traders. All right, we have the mindset, the rules of risk, and the tools. Now, let's get to the heart of it, the battle plans. The specific, repeatable strategies that you will practice and master. Andrew outlines 9 of them, but we'll focus on the core ideas that run through the most important ones. First, let's talk about strategies for riding the wave. These are patterns like the ABCD pattern and the bull flag momentum strategy. The psychology behind them is the same. Imagine a stock that has just had a huge, powerful move upward. This is point A to point B. This is the pull of the flag. Amateurs see this and they jump in at the top, chasing the stock. This is a mistake. Professionals wait. They know that after a big run-up, some of the early buyers will start to take their profits. This causes the stock to pull back or trade sideways. This is point C, the consolidation period, or the flag itself. This is the quiet time. But if the stock is truly strong, new buyers will step in during this dip. The price will refuse to go down any further. It finds a floor, a level of support. When you see the stock start to move up again, breaking out of that consolidation, this is point D, that is your low-risk entry point. You're entering for the next wave up. Your stop loss is placed just below the consolidation area point C. The risk is small and clearly defined, and the potential reward is the next leg of the rally. Next, we have strategies for betting on exhaustion. These are the reversal trading strategies. The guiding principle here is, what goes up must come down, and vice versa. When a stock has moved too far, too fast in one direction, it becomes stretched, like a rubber band. The traders who were driving the move become exhausted. This is where you look for a reversal. But Andrew warns us, you must never try to catch a falling knife. You don't just buy a stock because it has dropped a lot. That's a recipe for disaster. Instead, you wait for confirmation. What does that look like? First, an extreme move. You're looking for a stock that has had at least 5 consecutive red or green candles. Second, you look for a sign of indecision, one of those hammer or doji candlesticks we talked about. This is the first signal that the battle is turning. Third, you wait for the first candle to make a new high after a long downtrend, or a new low after a long uptrend. This is your confirmation. That is your entry point. Your stop loss is at the very bottom or top of the reversal. Again, the risk is small and clearly defined. Finally, we have what is perhaps the most important strategy in the book, because it revolves around the most important indicator, VWAP trading. VWAP stands for Volume Weighted Average Price. Don't let the name intimidate you. It's a simple but powerful concept. A regular moving average just averages the price. VWAP is smarter. It calculates the true average price by taking into account how many shares were traded at each price level. Why is this so important? Because the big institutional traders use it as their benchmark. Their performance is often judged by whether they bought below the VWAP or sold above it. This means the VWAP line on your chart acts like a powerful magnet or a barrier. The strategy is simple and elegant. When a stock is in an uptrend, it will often pull back to the VWAP line and bounce off of it, using it as a support level. That bounce is a beautiful, low-risk entry point to go long. Conversely, if a stock that was strong breaks below the VWAP and then tries to get back above it but fails, that rejection is a powerful signal to go short, betting that the sellers have now taken control. VWAP trading is a favorite of many professional traders because it's based on the underlying structure of how the big money operates in the market. These are just a few of the core strategies. Others, like support and resistance trading, are based on the idea that the market has a memory for certain price levels. The opening range breakout is about waiting for the initial morning chaos to settle and then trading in the direction of the established trend. But the key isn't to learn all 9 strategies at once. It's to find 1 or 2 that resonate with you, that fit your personality, and to practice them over and over again in a simulator until they become second nature. And that brings us to the final, and most profound, part of Andrew's teaching, the path to becoming a professional. This isn't about a secret indicator or a magic formula. It's about process and discipline. The journey begins with education and simulated trading. Andrew is adamant about this. You should never, ever start trading with real money. You must spend at least 3 to 6 months in a realistic simulator, trading with fake money but real-time market data. This is your flight school. This is where you practice your strategies, master your hotkeys, and make all of your beginner mistakes without losing your hard-earned savings. During this time, your goal is not to make $1 million simulated dollars. Your goal is to develop a process. You learn to do your preparation every morning, building your watch list, identifying key levels, and creating if-then plans for your trades. You write it down: if stock XYZ breaks above VWAP, then I will buy. My stop will be here, my target will be there. This planning process removes emotion from the equation. When the market opens, you're no longer reacting, you're executing a pre-written plan. It requires hard work, patience, and above all, discipline. The discipline to wait for your setup. The discipline to honor your stop-loss, no matter what. The discipline to walk away when you've hit your daily goal, or when you've hit your maximum daily loss limit. Andrew also stresses the importance of mentorship and community. Trading can be a lonely and emotionally draining profession. Being part of a community, a chat room of like-minded traders, gives you a support system. It allows you to ask questions, share ideas, and see that even experienced traders have losing days. It normalizes the process and accelerates your learning. And finally, the key that ties it all together: reflection and review. At the end of every day, you must journal your trades. Take a screenshot of the chart, write down why you entered, why you exited, and what you were thinking and feeling. This is not optional. It is the most effective way to learn from your mistakes and your successes. Professional traders are obsessive about reviewing their performance, because they know that's where the real growth happens. The path Andrew lays out is not easy, and it's not quick. He estimates it takes the average person 6 to 12 months of dedicated practice to become consistently profitable. It's a marathon, not a sprint. But the skills you develop along the way, discipline, emotional control, risk management, and process-oriented thinking, will serve you not just in trading, but in every area of your life. It's a journey of transforming yourself from a gambler chasing excitement into a business owner executing a well-honed plan. And if you're willing to walk that path, the freedom on the other side is very, very real. Commentary. As we reflect on how to day trade for a living, it's clear that this book is about so much more than just making money in the stock market. At its core, it's a manual for mastering yourself. Andrew Aziz's most powerful lesson isn't a specific chart pattern or trading strategy. It's the relentless focus on process over outcome and discipline over emotion. In a world that constantly sells the idea of overnight success and easy wins, this book is a refreshing dose of reality. It tells us that true, sustainable success in any high-performance field isn't born from luck or a single brilliant move. It's forged in the daily, unglamorous grind of preparation, execution, and review. It's about showing up every single day and doing the right things, whether you feel like it or not. The idea that your only real job is to manage risk is a profound one. It shifts the focus from trying to control the uncontrollable, the market, to controlling the one thing you can, yourself. Your decisions, your position size, your entry and exit points. This is an incredibly empowering mindset. It turns you from a passive participant, hoping for a good outcome, into an active manager of probabilities. What I find most compelling is how these principles extend far beyond the trading screen. Think about it. The discipline to stick to a trading plan, even when fear or greed is screaming at you, is the same discipline needed to stick to a fitness plan when you're tired, or a business plan when you face a setback. The patience to wait for a high-quality trading setup is the same patience required to build a meaningful career or a lasting relationship. This book is a powerful reminder that the skills required for financial freedom are deeply intertwined with the skills required for personal growth. So, how can you start applying these ideas right now, even if you're not ready to open a trading account? Here are a couple of simple actions you can take today. First, for the next week, just become an observer. You don't need any special software. Just open a free charting tool like Yahoo Finance and pick one company that's in the news. Watch its stock chart throughout the day. Don't try to trade it, don't even pretend to. Just watch the story unfold. See the battle between buyers and sellers. Look for the moments of strength and weakness. Can you spot any of the simple patterns we talked about? This simple act of observation, without the pressure of having to do anything, will begin to train your eye and your mind to see the market in a new way. Second, apply the 2% rule to a different area of your life. we often don't start new things, a new hobby, a side project, a fitness routine, because the perceived risk feels too big. So, ask yourself, what would it look like to risk only 2%? Not 2% of your money, but 2% of your free time this week, or 2% of your creative energy. If you have 10 hours of free time, what could you do with just 12 minutes dedicated to that project you've been putting off? Framing it this way makes the first step feel incredibly small and manageable. It's a powerful way to start building momentum in any new endeavor. Ultimately, this book is not just a guide to a career, it's an invitation to a higher level of personal accountability. It challenges you to become the kind of person who can operate with logic and discipline in the face of uncertainty and emotional pressure. And that is a skill that will pay dividends for a lifetime, no matter what path you choose. That was our journey through How to Day Trade for a Living by Andrew Aziz. We've explored the core principles today, but I'll be honest with you, a summary is like looking at a map of a beautiful country. The real magic happens when you actually travel there yourself. It's in the quiet moments of reading, when a particular story or a simple phrase connects with you in a way you didn't expect. This summary is designed to help you decide if this book is worth your time and attention. If anything we've talked about today has sparked your curiosity or resonated with your ambitions, I encourage you to grab a copy. Reading it isn't just about learning information, it's an experience that can genuinely change the way you approach not just trading, but any challenge you decide to take on. The link to the book is in the description below. Also, if you found this summary valuable and it gave you a new perspective, please take a moment to hit that like button and subscribe to the channel. It lets us know we're on the right track and ensures you won't miss our next exploration into another life-changing book. Let's keep learning and growing together.